If you look at the CME Fed Watch, 96% chance of 25 basis point cut. It seems to be the consensus we're going to get something. Is 50 basis points possible?
I don't think so. I think you get 25 basis points, and I think the more interesting dynamic surrounding this afternoon's Fed meeting is how many dissents do we get? We potentially could get 3 dissents. That's the first time since 1988. The dissents will be regarding what you're speaking toward, which is we should get a 50 basis point cut. So I'm interested to hear from Steve at some point what he thinks they should be doing with the balance sheet. We've run it down to somewhere around 6.6 trillion now. Maybe we need to start buying MBS instead of letting those securities run off. But I think today is going to be about a 25 basis point rate cut with dissent.
All right. I believe we have Steve Leisman back in D.C. Technical difficulties resolved. Steve, coming back over to you. I'm going to ask you the same question that Joe just answered. Is that 50 basis point cut potentially on the table here?
I think it's on the table for maybe people who want to dissent, Frank. I don't think that's where the Fed is going here. They go into this meeting, you have a couple lackluster job reports. You got a pivot by Fed Chair Jay Powell and Jackson Hole towards the dovish side. Markets have confidence in the cut today and 2 more this year. So I just want to go through, Frank, real quick, how the Fed might signal more cuts to come. 3 places to look. Look at the level of concern with weak jobs versus sticky inflation from tariffs. Look for changes to the dot plot. It's going to show the rate outlook for the committee. And look for potential dissents in this regard, showing how much leaning there is for tighter or looser policy on the margin. Back in June, it's the latest Fed forecast. 7 officials saw no cuts this year. 8 forecast 2. That made the median just barely 2 here. That could go to 3 today, affirming the market's view of multiple cuts this year. Another issue, the one Frank brought up, possible dissent in favor of 50 basis points cuts. But there you see Stephen Myron, the new Fed governor, unpaid lead absence from CEA, sworn in as Fed governor right there, reflecting President Trump's desire. Does he reflect his desire for a drastic decline in rates? He could be joined by 2 other Trump appointee governors, both of whom are candidates for Powell's job as chair. It may be offsetting that, though, a dissent on the more hawkish side from some Fed members more worried about inflation than jobs. So a rare possibility of dissents on both sides, Frank, unless Powell does what he often does, find a way to forge consensus on the committee. I don't think that consensus, Frank, is in the 50 basis point rate cut today.
All right, I want to go to Jay Powell, the press conference, obviously, after the rate decision. How do you expect the tone to be? Could we potentially see a hawkish cut here? And if so, what would be, Jay Powell, in your mind, what are your expectations? What would he be focused on? Because a lot of concerns about stagflation, but just yesterday, we got a much better than expected retail sales report that seems to signal at least more strength in the economy than we feared.
Yeah, this is weird. I see the Atlanta Fed GDP now running at 3.3%. For the third quarter here. And I see a lot of economists on the street with a 1.5% full year GDP number. So we're going to have a real slowdown in the fourth quarter to get there, or we're not going to have that slowdown. I really think Powell's going to try to be measured here, give the market the minimum of what they want, hold open the possibility of additional cuts this year, but not necessarily promise it outright, because I think he wants to hold on to the flexibility if things coming in, Frank, the way you suggest, stronger than expected. If that inflation from tariffs ends up being worse. Our CNBC Fed survey, Frank, I think it's important, said substantial amounts of price increases are yet to come from tariffs. There's a limit to the extent to which the Fed is going to be promising much lower rates while that inflation rate is moving away from its target of 2%.
All right, Steve Leisman live in D.C. Stephen, you got to get over to the Fed for that decision and the news conference. Thank you again. Liz, I want to come over to you. Just talking about a little bit about what Steve talked about, these dissenters. We're going to get that dot plot. Yep. There's potential for some of these dots to be just kind of out of the range of the rest of the group. What would that signal to the market?
So the dot plot in June it had a lot of dispersion. It was really heavy on the no cut side and then really heavy on more cuts. So what I think we'll see this time is, first of all, base case being, I don't think a lot changes in the summary of economic projections. So I think that they're going to use their ability to just not change their projections for 2025. The dot plot itself probably starts to look more dovish. So I think the weight of it starts to look like more cuts in 2025, but the average still probably signals only 2 for this year. I think actually the devil will be in the details of the dot plot and all of the summary of economic projections for 2026. And some of these, the market moving events, the potential for a market moving event is if we see something like the unemployment projection move up or if the Fed starts to signal that they're seeing more cuts necessary in 2026. But right now, there's a pretty big distance between what the market wants by the end of 26, which is 6 cuts total from now until December 26. The Fed is only signaling 3 cuts between now and then. So if those two numbers start to move together, I think the market will like it. If they don't, we have the opportunity for volatility.
To your point, Bank of America out with a note lowering their U.S. growth and Fed outlook, saying, a number of issues here. The lower U.S. growth, Fed yields, and dollar outlook. They now expect the Fed to cut 125 basis points, 50 this year, 75 next year, less than a lot of people were thinking before we came into this meeting. Joe, I see you going, maybe, maybe not. Steve Weiss, I'm going to come over to you. There is the possibility of a hawkish cut here. How do you think the market will react?
I think the market may take a knee-jerk reaction down, but then again, it's off to the races. This market is a market that's unconcerned with valuation or fundamentals. It's only concerned with direction and feeds off direction. So what people will focus on, perhaps what they should focus on, is that as much as I don't like to engage in trite sayings, you don't fight the Fed. Pure and simple. So whether it's 75 bips this year or 50 and 75 next year, it just doesn't matter if you take an intermediate, longer-term view. Short-term, you can't keep hitting new highs every day with the lack of news, right? And in fact, you can argue that a lot of news is negative, including, to Joe's point, the 3 dissenting votes, which, if that's what occurs, are politically driven and gnaw at what should be an independent Fed. So, look, I think the market looks okay here because I can't find a reason for it to go down, and the currents are just too strong driving it higher. And, if they do cut, then obviously that's positive, hawkish or not. I don't think anybody expects Powell to be overly dovish anyway. But the counterpoint is, what does he say about inflation? Inflation has been ticking up. Now, it's going to continue to move higher with tariffs unless the Supreme Court comes out and says and affirms what the lower court has alluded to, which is that you don't have the power to do this.
Right. Steve, to your point, Evercore out with the note headline, "Don't fade the Fed," basically saying the backdrop for global equities remains compelling. They're maintaining their S&P price target for the end of this year at 7,400 as the Fed begins cutting rates. And we also transition into the strongest quarter of the year for equities. Jim Leventhal, you've been waiting patiently. Your views on this Federal Reserve meeting, the Jay Powell press conference, cuts expected, the tone may be the market mover here.
Yeah, well, I'm happy to go last because I wanted to see if something that the 3 of you said would change my mind. Here's my hot, exciting take. I have never been more bored in advance of a Fed meeting than this one.
Is it by what we said or the meeting?
No, you guys are terrific, and I was just hoping that there was something that would get my juices going. I don't care. This is the most telegraphed 25 basis point rate cut that I've ever known. As far as the dissensions, they're there. We know they're coming. And, when we talk about what Chairman Powell may or may not say or what the dot plots may or may not indicate, let's face it that these things change, and they change rapidly. I don't care if we're looking at Fed funds futures markets or the dot plot or any particular economist's projections about where the Fed funds rate will be or what Steve Leisman was saying about economic growth. It always changes. What really matters to me is that the economy is strong, that 3.3% Atlanta Fed GDP indication is very strong. Sure, there's some cracks in the labor market. I'll tell you what's more exciting to me is tomorrow's weekly jobless claims, because we had that blip up last week. It may have been fraudulent claims in Texas. I want to make sure that indeed was a blip. That's more exciting to me. We don't have any meaningful earnings. Joe, I see you looking concerned
I'm surprised.
at my lackadaisical approach.
No, I'll tell you why I'm surprised.
There's no earnings to see. That's what I want.
Hear this out for a second. I'm surprised because you have been one who has advocated for the broadening out, who has said it could reach the cyclicals, it could reach small caps. I am focused on what we're seeing today. I keep going back to the Fin 5. Again, you have 4 of them, ex Morgan Stanley, making 52-week highs. I don't think you need to trade down to small caps based on a rate cut. I think you get the broadening out in large cap financials and industrials. But this is the moment that those who believe the small cap trade is about to awaken, this should be the catalyst, right?
Whether it's small caps or the broadening, the equal weight S&P 500, your Fin 5, whatever you call that. I like that, by the way. Today's Fed meeting isn't the substance, to me at least, on which any segment is going to go higher. I need earnings, okay? Now, every indication every indication is that the third quarter earnings season is going to be great. In particular, note that the negative revisions going into the third quarter have been very, very low.